Nike just reported earnings of 35 cents per share, beating expectations by 24%, and yet the stock dropped over 10%. So what's really going on? Is this a massive buying opportunity or the continuing of a long decline? In this video, I will break down why the stock crashed, when it might stop falling, whether it can recover, and my personal experience investing in Nike. At first, the earnings looked solid, but once you dig deeper, the problems become clear. Net income down 34.5% year over year, which is a huge red flag. CEO Elliott Hill admitted that the company's turnaround is taking longer than expected, and that alone shakes investor confidence. Then there is Converse, which is in serious trouble, with revenue down 35%, showing weakness in a segment that used to drive growth. Margins are getting squeezed too. Gross margin dropped 130 basis points to 40.2%, which means profitability is under pressure. High petrol prices make things even more difficult. And CFO Matthew Friend warned that restructuring disruptions will continue through the rest of the year. But maybe the most concerning part is China. Revenue in China fell 7%, and that's a key growth market for Nike. Now, it's not all bad news. There are a few positive signs. Wholesale revenue actually grew 5%, showing demand is still there. And footwear, Nike's core business, bought $7.35 billion, up 2% year over year. So the business isn't collapsing, but it's clearly struggling to grow. Nike isn't just any company. Founded in 1964 as Blue Ribbon Sports, it became a global powerhouse thanks to branding, innovation, and athletes like Michael Jordan. For decades, it dominated the sportswear industry with a strong moat, meaning competitors couldn't easily catch up. But today, that dominance is being challenged. Brands like Adidas and newer players like Hoka and On are eating into its market share, while Nike is trying to reinvent its strategy. In my opinion, Nike's shares are worth more than $50 a share, but right now the stock is in free fall and it could go even lower. Personally, I'm comfortable buying under $50, but you have to understand the risk. Stocks don't bottom when they look cheap, they bottom when the business starts improving. So for me, the real turning point will be when revenue starts growing again. Margins also grow and we see actual result from the restructuring. Until then, volatility is expected. Management is already telling us this turnaround will take longer than expected. That likely means the next year could be lost for the company. After that, if things go right, I can see the stock moving back to $80 to $90. But will it ever reach its all-time highs again? I'm not sure. Nike has clearly lost part of its competitive advantage over time. And once investor trust is broken, it takes years to rebuild. I used to love this company as user and as investor. And honestly, I still like it, just not as much as before. I started buying Nike in March 2021 at around $140 per share. I kept dollar cost averaging as it dropped down, and now my average price is around $90. Realistically, I don't expect to be in profit anytime soon. But at these levels, the stock is so beaten down that even small positive news could send it up 20% or more very quickly. So the big question is Nike a falling knife or a comeback story in the making? Let me know what you think in the comments below. If you found this breakdown helpful, make sure to like and subscribe. It really helps the channel grow. See you soon. Bye bye.